It's official, folks. We have seen Bitcoin go up $8,000 in December already. I believe that this Santa rally is not random. It is the market front-running a major structural shift in Federal Reserve policy. For the first time since 2022, the Fed has formally ended quantitative tightening on December 1st. The balance sheet runoff happened, which frees the Fed's assets at about $6.5 trillion. This decision alone signals that the liquidity conditions were tightening faster than the Fed was comfortable with. And once quantitative tightening ends, the only direction left on a long enough timeline is either sideways or up. We've seen a fun little rally here, but the real important question is what the next 6 to 12 months look like. The range of credible outcomes, though, they all point in the same direction. One path is a very slow but steady expansion in T-bill purchases to maintain the reserve balances, which functions as kind of a soft version of quantitative easing. Another path is a more forceful return to balance sheet growth if the economy weakens or funding markets start to show some strain. But even the most conservative scenario where the balance sheet simply stays flat while the policy rates start to move a bit lower, that still represents a very decisive shift away from the tightening regime that capped Bitcoin for the last 2 years. I really believe that this early December rally could be just a preview. If the liquidity continues to expand on the margin, Bitcoin historically responds with outsized precision. Ending QT removes one of the few macro headwinds that remained, and now the market is starting to price what comes next. I think that this is a beginning of a transition back into a liquidity positive environment, which is exactly where Bitcoin has produced its strongest multi-month price action. When we talk about Federal Reserve policy, we're not talking about an abstract macro chart that only the economists care about. We are talking about the single strongest variable that has historically shaped Bitcoin's explosive upside. Every single major Bitcoin bull cycle has coincided with expansions in global liquidity. This is documented fact. When the Fed is easing, when the reserves are rising, when balance sheets are growing, Bitcoin responds faster and with more magnitude than any other asset. And this is not just my theory, this is based on the data that is out there. Studies have consistently shown that Bitcoin has one of the strongest long-term correlations with liquidity growth across all risk assets. During the 2020 and the 2021 expansion, the Fed's balance sheet surged and Bitcoin delivered one of the most powerful price movements ever recorded. Then when QT restarted in 2022, along with a lot of other things that were happening in the crypto economy, we saw the exact opposite. Bitcoin corrected not necessarily because the asset of Bitcoin changed, but because the liquidity environment changed, and there were a lot of scammers out there souring the mood for us all. But now if we look at what has happened, QT is over, the reserves are bottoming, and the next policy steps point towards stabilization and renewed expansion. Bitcoin has immediately rallied in December because the market seems to know the playbook a little bit. Liquidity doesn't even need to explode for Bitcoin to move, it only needs to stop contracting, and we are already beyond that stage. So this is exactly why Bitcoin traders have been so reactive to even these small policy shifts. Once the macro backdrop fully transitions from restrictive to accommodative, well, Bitcoin becomes the prime beneficiary. So I believe that this is the beginning of that environment, and the asset is kind of already telling you how it's interpreting the next phase of Federal Reserve policy. There's also this thing where perhaps the new Fed chairman might be a former Coinbase advisor. So we're going to look at the scenario one, kind of my base case here. The Federal Reserve doesn't necessarily announce a formal return to quantitative easing. Instead, it takes the path that it has kind of already begun to signal. This is the era of what they might call reserve management purchases. So in practice, that means very steady buying of treasury bills to keep the bank reserves at levels that the system considers safe. On paper, it's not QE, but in function, it does expand liquidity. The Fed calls it technical, the market calls it balance sheet growth, but Bitcoin has never cared about the terminology necessarily. It only cares about the direction of liquidity flows. Think about the setup. QT has ended, the balance sheet has stabilized. The next step are monthly T-bill purchases to prevent reserves from falling too low. So even modest buying in the range analysts are expecting can shift liquidity meaningfully over the next 6 to 12 month period. So if there is a subtle upward slope, that's really all Bitcoin needs to continue to reprice higher, because Bitcoin acts as a real-time amplifier of marginal liquidity changes. I think that this scenario might be the most likely. It doesn't require a crisis. It does not require a recession. It only requires the Fed to maintain stability in the banking system. As the liquidity gradually expands, Bitcoin benefits first, and it benefits disproportionately. This is exactly how prior cycles have begun in the past, not with some dramatic policy announcement, but with incremental upward pressure on liquidity that does compound month after month. So in this base case here, we don't really need some shock event. We are talking about the environment that we kind of already have. The QT is gone, the reserves are supported, and the balance sheet is slowly turning upward. And historically, that alone has been enough to drive powerful multi-month Bitcoin rallies. In the second scenario, the Federal Reserve is forced into a stronger response. This might occur if the economy weakens faster than expected, if unemployment rises due to AI, or if the funding markets begin to show real signs of stress. In this environment, the Fed does not have the luxury of slow technical adjustments. It has to act very decisively, and historically, that means a return to full-scale quantitative easing. And fun fact for you, full quantitative easing is not subtle. It means the Fed moves from buying these short-term treasury bills to purchasing longer-dated treasuries and mortgage bonds in size. It means the balance sheet expands at a faster rate. It means the real yields out there, they fall, the risk premiums compress, and liquidity in the system increases much more rapidly. So scenario 2 here is the dynamic that happened in 2020 and 2021 when we saw the Fed expand the balance sheet aggressively. We saw Bitcoin tend to reprice upward with extraordinary speed. And the reason is simple. Bitcoin is the highest sensitivity asset to global liquidity. When liquidity surges, Bitcoin absolutely leaps higher. This has been demonstrable over Bitcoin's history. Now, I'm not saying this is guaranteed. I am saying that this is a credible outcome based on Bitcoin's price history. Right now, we know that the system is carrying record levels of debt, and even small cracks can force the Fed to intervene. And if that happens, Bitcoin will price the policy shift immediately. Full QE is the most powerful catalyst in Bitcoin's historical dataset, and this scenario would put Bitcoin in one of the strongest macro environments it has ever experienced. This is more of a high-velocity path, not the base case, but a scenario where Bitcoin responds with the kind of upside that only appears when liquidity increases sharply across the entire financial system. In this third scenario here, the Federal Reserve does not necessarily expand the balance sheet meaningfully, but it also does not return to quantitative tightening. Instead, it allows the balance sheet to kind of stabilize at its current size while shifting the policy rates lower as the economic conditions might soften. This scenario is kind of the simple one. The balance sheet holds very steady over the next 6 to 12 months. Financial conditions might start to ease gradually, and liquidity remains supported without any dramatic interventions from perhaps a new Fed chairman. Even this outcome, which I do think is probably the most conservative out of all three of them, I do think it is still favorable for Bitcoin. A flat balance sheet at $6.5 trillion is not neutral. It is structurally accommodative compared to any historical baseline prior to 2020. This reflects a permanent change in how the United States now manages debt, liquidity, and banking system reserves. In this plateau scenario, liquidity does not contract. Rate cuts, they improve financial conditions. Real yields, they move down over time. The environment becomes supportive for all risk assets, not just Bitcoin. Except we all know that Bitcoin is the risk-off asset, but unfortunately, the market will wake up to this fact one day. But hey, we're still early 16 years in. But in reality, Bitcoin benefits more than all of those other risk-on assets because they absorb global liquidity without being constrained by earnings, credit spreads, or balance sheet leverage. This is just the slow grinding bull case. There's no crisis, there's no shock, there's no dramatic announcement. I'm talking just stable liquidity, some easier policy, and the recognition that balance sheet normalization is no longer credible in an economy built on structurally high levels of debt. Bitcoin is going to thrive in that setting because its supply schedule still doesn't change when the monetary system becomes progressively more accommodative. This is the Bitcoin climbing higher steadily as the market prices in a longer runway of supportive macro conditions without the volatility of some major policy shift. When you step back from the individual scenarios, the broader picture does become a bit unmistakable. QT has ended, liquidity contraction is officially over, every credible policy path forward from this point points toward a more bullish environment for Bitcoin, whether the Fed takes the slow approach with these technical purchases or the steady approach with the balance sheet plateau and rate cuts on top of that. Well, the direction of liquidity is no longer negative. In my opinion, this is the core reason why Bitcoin has begun to rally. Bitcoin responds to macro turning points before they're fully recognized by the broader market. This first move in December was about the market pricing a shift in liquidity conditions. The market is transitioning out of this restrictive regime into an environment where liquidity is either neutral or positive. Neutral at worst, positive at best, so I think this is bullish for Bitcoin. Historically, we've seen that this kind of shift leads to explosive Bitcoin price action because it is a multi-month, multi-year regime shift. This is where we're at now. The conditions that have historically supported Bitcoin's most powerful moves, they are forming again, and the asset is already signaling what could come next. My name is Adam Livingston. I am the Bitcoin Wizard. Thank you for watching this video from Swan. We love having you here every single day as we spread the orange gospel to the masses. Like this video and subscribe to Swan to be well positioned when this shift happens. Have a terrific day. Do not party too hard. Class dismissed.